Hello everyone, in this video, let's get into an introduction of master budget as an essential part of the financial planning and analysis process, normally called FP&A. FP&A is a set of planning, forecasting, and analytical activities that support a company's major business decisions and overall financial health. Let's take a look for a short video clip from the SAP by introduction of part of their business platform.
A set of connected processes designed to maximize profitability. From planning, forecasting, scenario modeling, budgeting, and performance reporting. A continuous loop that keeps an organization focused on achieving its goals. The financial rigor behind FP&A isn't new. But what's changed is the day-to-day practice, and it's changing fast. Why? Intense competition, economic headwinds, and speed. Market demand has become volatile, so planning cycles need to accelerate as a result, from a fixed schedule to whenever needed. And the role of the CFO is also shifting to keep up with the pace of business. Today, CFOs and their teams need real insights in real time, something you simply can't get from spreadsheets or standalone systems. Instead, they're turning to sophisticated FP&A solutions that combine financial data, operational data, and external data like market trends in one place. A single source of truth, always close at hand. Now you can analyze all your information in real time, uncover in-depth insights for informed decision-making, addressing today's challenges while anticipating tomorrow's needs. And that's vital, because the future is guaranteed to bring even more change. That's FP&A today, the foundation that makes it possible not only to keep pace, but to get ahead.
So very promising, right? So we can see from here, the FP&A is not a isolated accounting function or function from any of the business area. Is really a integrated procedure, so you can get all of the operational data and transfer into your financial insights, can assist the managers to make right decisions. So now let me get back to our slide to see how the master budgets can be wired into this process of the FP&A. So chapter 9 is about financial planning and analysis, which we focus on the master budget as the planning part of this whole process. So the first learning objective from the book is explain the relationship between financial planning and analysis and the master budget. As we can see from the video, so financial planning and analysis is a comprehensive and forward-looking type of plan, can tell the managers so what will be going on in the future for the business if you want to implement the current business strategies, and how you can plan your business activities and how the financial outcome will look like. And then the master budget is the centerpiece of the planning process from the FP&A module. So in the FP&A, we have forecasting, planning, analytical processes. And in the planning process, the master budget is a big part of it. In our book is introduced a complete FP&A will include planning, measuring and recording results, and finally evaluating the performance. Measuring and recording results is most you recognize, both the financial accounting and also the managerial accounting. We record and recognize all of the business activities. And then you compare the actual results with the planning goal, which we use the budget, right? So you can evaluate the performance, all of the variances, and how we can make a continuous improvement or make corrections in the future. So master budget is a centerpiece of the planning part of the FP&A module. But if you're looking for other business articles or like, from lots of the software or ERP system are offering this FP&A as a integrated or separate module the customers can use in their business operations. So the perspectives may look slightly different between the way they present the FP&A and also the master budget as an included module in this FP&A whole process. Also, just keep in mind, there is really no right or wrong, just depending on the way they understand and try to present the whole process and the role of the master budget. So I'm attaching the link for the video we just watched, which is part of a kind of an introduction from the SAP about their FP&A module. Is an integrated business planning platform. Okay, so you can consider. So rather than just the ERP or a customer relationship management, is really a integrated business platform. So you can get data from your other SAP functions and pull all of the operational data and use the modeling to build your planning for the future. Okay, very flexible and very efficient. Okay, rather than you work on the different the functions or the systems. So it's really you sit in front of the computer and all of the data will be generated and for your review like every day during your working time. And as we just discussed, the master budget is an important part of the planning component of the FP&A system. So in this budgeting process, mostly the managerial accountants with the help from other departments and functions, they will collect the operational data and convert them into a set of financial plans. So we can use the plans to implement the business strategies, allocate the resources which are needed to conduct your day-to-day operational activities. Also, we can predict, so where all of this financial data into a forecasted financial statements system. They call pro forma financial statements. So it's like you can prepare predicted financial statements. So not only your operational activities, we can get a quick idea of how the financial outcome will look like for the business, but how the income statement will look like in a year, in 2 years, and how my balance sheet will look like, and even your statement of cash flow and other essential financial reports. One important feature I want to emphasize, probably you also can notice when you read the ebook, the master budgets we are talking about here mostly involve quantitative terms. So it means we are converting the operational data into the numerical financial plans. So you may have some other business strategies like a general marketing plan or some supply chain management, right? So it's not really in numerical firms, then it's really not included in the formal set of the master budgets. So it's not only for business, even you're looking for budgeting for governments, for not-for-profit organizations. They are really using the quantitative tables or statements to impress the planning and the forecasting and the resource where we can get all of the resources and how you can allocate the resources. So keep in mind, okay, we really need to use the quantitative. So this is really a quantitative procedure. So it's very time consuming without the help of computer, software, or the business system. In the older days, if you only have some simple like Excel or a standalone work spreadsheet, lots of the times accountants may need at least 3 to 4 months to prepare the budgets for the next operational periods. So it's very time consuming and a very costly procedure. But these days, with all of the integrated business data system, especially like the SAP, Oracle, they have built-in functions for the budgeting can be wired into your overall FP&A system. In the book, they also emphasize there are 5 major objectives or the benefits we can use the budgeting system to help the business operations. So first one is definitely the planning process, right? So it's really helping you to do a detailed and quantitative plan to convert all of your general ideas or concepts into the data-driven process. So we can really see the numbers based upon the ideas and the concepts. And also the budgets can help all of the departments and the functions to communicate and support each other. Because if you have, for example, a forecasted sales increase, you cannot just keep this information inside your marketing department. You have to let the delivery, you have to let the production, also back all the way to the procurement, right, supply chain. Because the sales increase will require they produce more units. And then the production increase will require more material and labor preparation from the supply chain management. So better coordination and the communication between the different functions and allocate the resources based upon the business priorities. And again, for example, if I want to increase the production, right, increase the quality of the materials, or want to update the equipment or the facilities to make productions, where we can get the resources to to implement all of these ideas. So do we have enough cash, or should we borrow, from all, in bigger cases, shall we issue additional stock, okay, to fund some of the business, like the big budgeting items, okay, not only a small item, so like the initiations. Then after the budget has been made and used in the operational process, so you can use the budget numbers to monitor and controlling the actual operations. We can compare the month to month, or even like weekly production or sales or the profits compared to the goal we set up in the budget. So frequently we can check the progress, right? So are we still in the right track? Do we have some abnormal activities? So we can continuously make adjustment. Rather than waiting for the whole year to finish, then we go back to check. So it's a continuous monitoring and controlling process. And finally, you can evaluate performance and providing incentive to more improvements in the future. Okay, that's normally combined with your performance evaluation, variances analysis, or so your incentive system, okay, for the employees and also for the different procedures. Now let's looking for the different types of budget. Depending on the way you want to classify the budgets, excuse me. So first, if you're looking for the contents, right? So contents of the budget statement, we have the comprehensive master budget. So means it's a comprehensive financial plan to covering almost all phases or all aspects of your operations. So it's a comprehensive planning and forecasting for all of your operational activities. And then underneath, you have the individual budget to support the master budgets. For example, your individual sales budget, or the sales budget will focus on the sales volume and sales revenue. Then we can get a cash collection budget based upon the sales. Because for the business, for maybe like for the wholesales, they want to have lots of cash sales, but you can get the cash flow, the cash collection information based upon the sales budget, depending on your credit policies, right? Because later we need to combine all of the cash information into the cash budget, but the cash has been generated from a different type of operational activities and is used in supporting the business functions. So the cash information will be collected from different parts of your budgeting system. Then the production budget can be made to support the sales functions. Production budget is not a simple repeat. So you may wondering, oh, I want to sell 1,000 units. So my production will be 1,000 units as well. But in real case, think about you still need beginning inventory or ending inventory plays a role, right? So and the sales happens continuous basis. So the production budget will be made based upon the sales, but with adjustment of your inventory policies. So each company have their finished good inventory. I want to keep, for example, 20% of next month's sale, right? So I want to make extra 20% for next month's sale. So the production is on sales, but not repeating the sales. And you can see, like, if you continue the material budgets, labor budgets, and the manufacture overhead will support the production budget. And then we also can have the sales and admin expenses budget, okay, for the overall, the period cost expenses. So under the master budget, depending on the industry type and also depending on the operational details, we can include a variety of the individual budget. As I mentioned before, in addition to the budget statement, we also can pull the information from the budgets to make the predicted financial statements, right? So your major three financial statements, income statement, balance sheet, and the statement of cash flows. But these statements are not actual statements. It's based upon our prediction and budget numbers for the future, such as our sales revenues, cost of goods sold, sales and admin expenses. We can predict, or you can show clearly how the net profit will look like in the future. Also our asset structure, right? So how much assets, current assets, long-term assets, liabilities, and your shareholders' equities. Because eventually the operational, needed to be recorded and presented in using the financial statements. Also the cash flow information for the future. Okay, so predicted, budgeted, or like in accounting, they normally call pro forma financial statements, means they are not the actual financial statements for the past transactions, is predicted, okay, for the future operations. And also, the budgets can be categorized by the timing, okay, by the timing involved, the how long the budget period. Okay, we have different budget periods. We have long-term budgets, short-term budgets, and the long-term can be 5 years or 10 years or 3 years. Really, this is flexible depending on the company needs and the capacity you can prepare the budget. The popular ones we call annual budget, right? So you can imagine for like either rolling annual budget. Also, we have fixed budgets, right? So like 12 months for the right now you are thinking about the 2025, right? So for the whole year 2025, we have a fixed budget. In the meantime, you want to keep a rolling or revolving annual budgets, always 12 months forward looking, right? So it means 1 month past, like for example, like March 2024 is going, and then we are bring 1 more month in the future. Okay, we always keep a 12 months rolling budget. So the rolling budget is always give you a consistent view of the next 12 months, okay, right, in addition to a fixed annual budget. So the long range or short range, and even these days, people are questioning the annual budgets because the swift change of the business environment, right? So the annual budgets may lose relevance to the operations, so they are cutting short, like they normally call continuous budgets for quarter or for like semi-annual. So we always like keep adjusting, right? So keep adjusting our budgeting system so it remain relevant and current with the the day-to-day operations. The budgeting system are widely used in all sorts of organizations, not only for-profit businesses. You can see even in a church, right? Not for profits, the hospitals and governments, or even governments, all sorts of governments make their budgets. And sometimes in governments, the budget carry, so it's really authoritative. So it's like they have it's like the law, it's like the financial law the governmental officials must obey in the process they operate the government. And I normally teach governmental accounting as well. Another unique feature for budgeting in government is once they finalize the budgets, like for next fiscal year, they formally put the budgets into the financial accounting system. So in other words, we record the budgets into journal entries. Even they are predicted revenues or predicted expenditures, we do bring these predictions into our accounting ledger system. So when the actual revenues arrive, like your tax revenues or franchise revenues, you can compare the actual revenues accomplished with the budget, right? The total revenue budget for the year. So you can have the idea of how far we are along about the revenue collections. and how much revenue we haven't realized, right? So are we going to have some budget deficit? So in government's budgets, I would say at least equally important, or sometimes even more legally binding than the budgets in a for-profit business. Because in business, the budget is an internal management role. It's not really something external enforced, but budgets, once you release the budgets, the citizens or is available, is some monitoring or supervising the external stakeholders, okay, can use the budgets to monitor and supervise the governmental operations. But the goal for governmental budgets is not really for maximize the profits, or is mostly ensure the governments will have enough funding to support all of their programs and functions. So the governments can keep going, right, and provide the public services they promised to the community and the citizens, right? So high quality service and sustainable service to the citizens using the revenue, okay, they collected from the communities. And in our book, they give some, they give like, I like this picture because it really give you a master idea, like a master plan, right? And like comprehensive idea for the components of a master budget, especially for manufacture industry. If you work for merchandisers or service industry, you can revise or modify this system or easily into your own setting, or you can cut or change some of the budget components. For typical manufacturer industry or even merchandiser or service companies, the master budget will start from the sales. So sales drive all of the other business functions. So the marketing department will do a exhaustive market investigation, right? To have a concrete and reliable sales forecast into your budgeting period, like sales volume and sales price, sales revenue, and maybe your credit policies. So based upon their prediction, we can make the production budget to support the sales can be made for each of the budgeting period. Like I mentioned earlier, the production budget wouldn't repeat, or it's not a simple repeat or redundant with your sales budget. It's based upon the sales budget, but with adjustment of the beginning and ending available inventory. And then if you think about the manufacture process, we need the direct material, direct labor, and the overhead. We manufacture overhead budget to support the production budget. Material, this will be a lot of work because for the product, you may need hundreds or thousands of different type of materials, right? So there are lots of details involved. The quantities and the purchasing price and your supply chain management can play a critical role in finalizing the material budgets. Labor, HR, and production both are responsible for the direct labor budgets. Manufacture overhead, they also involve lots of details. So you need to predict like your depreciations, your utility expenses, supervisor's salary, right? So it's very similar to because we already learned the costing procedure, right? So how to track the cost and prepare the cost, especially for job order costing system. So imagine these are something similar, but this is not the cost report for the activities already incurred. Is the prediction, is the cost report we are predicting for the future based upon the production goals. And the byproduct from the manufacture process will involve your ending inventory from the finished good or the working process. Right, again, this is really tied to the cost flow we covered in the costing procedure, because we have material, labor, and overhead tracked by the working process and then the finished good. Anything unsold or anything incomplete by the end of the budgeting period will be your inventory. Okay, budgeted inventory. And when you prepare the balance sheet, this will be recorded and transferred into your asset. And yeah, similarly, the purchased but unused material will be put as the ending material inventory. So it's really like a financial accounting system, but that's not the actual numbers, is predicted numbers. So they put this dashed line about these three type of inventories. We like working in process inventory, finished good inventory, and your raw material inventory. You are going to use it to prepare the overall balance sheet. So then we have the selling and admin expense budget. The period cost expenses are directly serving your sales activities, such as your marketing, promotion activities, delivery budget, right? And customer service expenses, right? So all directly serve the sales activities. So there are lots of planning also involved here. And in this case, we can use the fixed cost and the variable expense to help you make predictions, right? So you can identify and isolate the fixed expense and the variable expenses. And so they call this the green parts. Okay, the green parts they normally call the operational budgets, and then the financing budgets are the kind of like the dark orange ones. So all of the information we are pulling information about the cash components, because cash is very important. So we are pulling all of the cash information from the operational budgets so we can examine where we can get all of our cash inflows and where the cash outflow will require. So the cash inflow and the cash outflows. And the inflow mostly coming from the sales activities or sales revenues. And you may have additional cash revenue, maybe selling your used assets or rental activities, but that's coming really maybe the not the big parts, or it's like supporting cash inflows. And the cash will be used for a variety of uses, like purchasing materials, paying the labors, and paying different type of expenses. So we need to identify all of the costs and expenses which will be requiring cash payments immediately, and which one we can put on account payables or salary payables. So all of this information will involve detailed financing budgets and eventually will be flowing to our financial statements with the budgeted financial statements. So based upon all of the cash information, we'll prepare a very critical budget, the cash budget. The cash budget is not the same as your cash flow statement. Okay, be careful. So cash budget majorly concerns, do we have enough cash inflow to cover all of the cash flow for each of the budget period? If we don't, then you need to make arrangements well in advance, for example, borrowing from the bank or issuing stock, so we wouldn't run out of cash during the operational periods. Okay, so that's the main purpose for the cash budget. Okay, it's kind of like check the cash sufficiencies. But the statement of cash flow is the present of the cash components, like the structure of your cash flow, how much cash from your operational activities, and how much cash from your investing and financing activities. Or is a presentation of our cash, like cash inflow and outflow during the budgeting period. So they have different purpose. So all of the, but these are the typical structure, but you can, when you apply to different business and organizations, you can adjust them, okay, always to the unique features of your operations. I remember in the book when they talk about a budget, for example, for airline company, right? Airline company, normally we put them into the service industries. They don't really have production, but they have the flight services, like the mileage they are trying to fly over the year. Then you need to prepare all of the gas budget, the parts, right, to service the airplanes and operations, and your labor budgets, your pilots, your flight attendants, and even your terminal service personnel. So they have different business operation, and the budgets will serve that need. So in this introduction, we have a brief idea for the FP&A, the budgeting structure, and I will stop here, and then we'll talk about more detailed planning process for making the master budget.